In theory, the stock market is a discounting mechanism. In other words, today's prices reflect what has happened and what is expected to happen. When an unexpected market drop occurs, such as from the Chinese virus, it's because the market now expects the future to be worse than just previously assumed. Although the world is reacting to severe economic pain, much of the bad news is likely priced into the market. On the other hand, if developments show that the outlook is less painful than expected, we could see the market set off on a new bull market. Theoretically, the markets stop going down when investors can rule out worsening conditions. So, where is the stock market in this process now? Well, let's take a look. In my experience, in order for the stock market to make a bottom, first we need visibility of how deep and how long the economic disturbance will be, with infection and death counts becoming more accurate and understandable. This condition is in the early stages of formation. Second, the market will require adequate global stimulus. With government programs being rolled out or in negotiation, this requirement is also solidifying. Third, the markets will require reduction of the funding and liquidity risks. This condition kind of goes along with the previous governmental involvement. If we get government funding and backstops, this will help the liquidity issues. Fourth, prices typically revert to a mean and typically go beyond that. With a market plunge through Monday of this week, there is good probability this condition will be met soon. Lastly, the surprise of unknown risks must be reduced. The markets moved through a lot of this in the past 2 weeks when they were hit by one worsening forecast after another. Although some worst case forecasts are still thrown out by any given politician, economist, or healthcare worker while tripping over themselves in the interest of trying to outdo the others, the intensity of these worst case forecasts have declined. In fact, we might start seeing forecasts of conditions improving. So, we're clearly well along the path of meeting these conditions. But to be much more objective, let's take a look at our charts to see what they show. So, what we're going to do is look at various charts on individual companies and see where they are along the process. And the first chart here is Netflix, and the symbol is NFLX. For disclosure purposes, I do not hold any shares of Netflix at this time. The top was there, and the bottom was here. So, we came all the way down here. We had a V bottom and a recovery up to that point there. Looks pretty good. Look at the MAC. We had the top there, the bottom there. So we came all the way down here, and the fast line is moving and up through the slow line. Is it any wonder that Netflix has bottomed with everybody staying at home watching in their own self quarantine? Not a surprise to me. Let's go to the next chart. And this is Amazon. The symbol is AMZN, and I own no shares of Amazon at this time. Again, the top, the bottom, we came all the way down, V recovery on our way up. Similar to Netflix, you can see that the fast line has come all the way down, bounced, and moving up through the slow line. Again, no surprise, everybody's at home ordering from Amazon. And let's go to the other end of the spectrum to take a look at Occidental Petroleum Corp. And the symbol is OXY, and I do not hold any shares of Oxy at this time. And the top was there a couple of months ago. The bottom is right here. Very long road down here. From, say, upper 40s down to $10.72. What a drop. Looking here at the MAC, same thing. We can see that the bottoming is occurring. It looks like it, with the fast line trying to move up through the slow line. Not quite there yet. Look at the histogram. That gives you a pretty good idea too. Lots of improvement. But back up to the price chart, I think Oxy is going to take a little longer than Netflix or Amazon. Let's go to the next chart. And this is Royal Caribbean Cruise Limited, and the symbol is RCL. I do not hold any shares of Royal Caribbean at this time. The top here, the bottom there, and you can see that it hit bottom and headed on up there. Looking at the Mac, same thing, very similar to Oxy with the top, a long drop, but a bottoming process here with a fast line just barely moving through the slow line there. So some positive news here, but again, I think this is going to be a while before it does come back to that zero line and starts improving there in the price. Back up here to the price chart on Royal Caribbean. As you can see, a pretty long drop, which means it may take some time to recover. Let's go to the next chart. And this last chart here is the iShares Russell 2000 ETF, and the symbol is IWM, and I do not hold any shares of the Russell 2000 ETF at this time. And if you remember, this is the laggard of the major indices, but let's take a look here. The top was there and the bottom was here, but even the Russell, you can see the improvement, or at least the bounce there. Moving on down here to the MAC, you could see it wants to bottom. It's heading on up. It's not there. It's got a little bit of distance to cover between here and here, which may mean some volatility or sideways trading. But as you can see, it depends upon the stock and where that stock happens to be in its formation. Some of the stocks have bottomed and are heading up. Other stocks are going to take their time. So the indices, in my humble opinion, at least as shown by the daily charts, are starting to bottom. Does that mean you should go in? Well, I think you take a look at the video from Monday, and I suggested there that you start investing 25% each month. So 25% today, in a month, another 25%, in a second month after that, 25%, and then a third month after that, 25%. But you know your portfolio and your investment decisions better than anybody. So use your best judgment. But I think the markets appear to be bottoming, at least by the daily charts. It's going to take time for the weekly and the monthly to show the same, but we may be in the process of bottoming now. And for today, that's ChewDog Charts. Thank you.